boys and girls. Hope everyone is here and was able to get through that crazy market that we had that looks like is completely just going the other way and no one cares anymore. So flash in the pan. But as always, I'm going to be just hanging out here for the next hour, talk to you guys about what I see going on in the market. I try to give you guys some idea of my game plans kind of going forward. And more importantly, answer the questions about what you guys see in the market and what questions you guys might have for if you want to talk about what happened on Friday and over the weekend, we absolutely can. If you wanted just to talk a little bit about individual names and stocks you want me to take a look at, we can do that as well, right? So this is something cool that StockTwits does, that this is your hour. We can chat about whatever names you want to talk about, crypto, stocks, whatever it is, right? I got the chat open right there so I can take a look. And let me just do a quick little screen share here. We'll grab a screen and we'll do this one and we'll pop right there and we'll click that button. Away we go. Perfect. Done. So what a world. Quickly, while the questions pile in here, let's talk about it. So on Friday, we had obviously a couple bad tweets from the man in power, sent the market spiraling. And then on the weekend, he said, just kidding, guys. And we gapped up huge. So what do I think happened? Now, I'm talking specifically equities. We know with crypto, it was a massive liquidation event. People getting really ahead of their skis. 50x leverage on crypto seems a bit wild, I guess I'll say, a bit obsessed to me, a little too much, but to each your own. I think a lot of it kind of happened from the equity side of things. So I've been talking about this forever, in which the equity or the equity market as a whole. Let's grab it takes a second to load there. So let's do indices and let's do the SPY. So I've been talking about this forever. I know I'm a broken record. You guys are probably bored, but this red line is the institution's net positioning, whether long or short in the overall market. And they've been shorting this whole rib up. Now, it's gone flat for a while because there's no government open. So this doesn't get updated every week the way it should. So we don't really know what that positioning is. But my bet is that they still haven't covered. They've been shorting this whole way up and they still haven't covered. And if that's correct, and if that's true, then this day was probably a day that they felt great for finally. And they could, hopefully cover that position. My bet would be that they didn't, and they pushed the envelope and they shorted more. And they said, finally, we got them. We've been wrong this whole time, but this trade war's coming back. Everything's going to be bad. Let's short more into this event. And then again, over the weekend, tweet comes out and says, just kidding. And with saying, hey, just kidding, we gap up. And ever since that gap up, we've just kind of been slowly grinding all day long. And that to me means that there's a bunch of things that happened on this candle. One, I'd be willing to bet, and I don't have data to support this, that probably more shorts piled on. The other thing I'd be willing to bet is that there's a lot of people that were in good positions and then sold those positions. And now that it looks like it's going to be over almost immediately, that makes me think that we're potentially in this land where we could have a big catch-up trade where people are having to either cover to get out of their shorts or they have to pile into the long side and start buying stocks. And it seems like that could be what's happening. We're rallying back up here. So I think that people are caught, right? People are caught out on this down move, right? A lot of people said, oh my God, and they panicked out of their position. Those people likely are going to buy back. And then there's a bunch of people who potentially shorted, which is even worse because they have to come back. So those two things make me way more bullish than probably most people are in this market. And it will take until we get all the way back up in order to confirm that. And then we can rocket from there. So that's what I see. Now, what happened in the crypto markets, just to go over quickly, I do see the questions coming in chat. Make sure you ask those. I will get to everyone. In the crypto side of things, we can do BNB. that's leverage, right? People are very leveraged. They were very, very strongly leveraged in the crypto space. You saw it all across Twitter if you paid attention. This guy's like, oh, I was long BNB on 50 times, 100 times leverage, and things just kind of reversed. And it's like, okay, well, kind of what do you expect? But, not going to disparage not going to kick anyone while they're down. But it creates these moves. So what happens is you have guy A, and guy A is long BNB from, let's say right here. And he's long BNB on, 10 times leverage or 20 times leverage. And he's expecting a little breakout here. Well, on this initial down move, what happens is his account goes to near zero to maybe at zero to negative, and the broker sells his BNB. And they say, we're not taking the risk. It's your risk. So we're selling you. We don't care what the price is at. You're getting out. So that what happens is when that guy gets sold, his sell is going to push price a little bit lower. And then you got another guy who's leveraged up and they make him sell. And then you make another guy who's leveraged up and they make him sell. And all the way down, it's a reverse short squeeze. You saw it in GameStop when GameStop ripped, and you saw it in QMMM when that thing ripped. And now you're getting the opposite, where it's kind of like a long squeeze. There's too much leverage in the system. And you get this kind of explosion. And then when more sensible minds who have cash and don't trade on leverage start looking at BNB down like 50% in a day, they're like, well, I'm going to start buying here, right? I'm not going to sell. Another one, hold your laughter class, is Filecoin. This, I think, is a more egregious example, right? This went down like 80%, 85%. So there's a lot of people looking at it and say, well, Filecoin's not, it's not like it's a rug pull or anything like this. It's just there's too many people leverage long Filecoin. So I'm going to buy it. I was one of those people. I buy more of this thing. I got it around 25 cents on the way back up because I'm like, this isn't, the world's not ending. There's just a slightly increased tariff tantrum. I think the tweet that I put out was, Filecoin known for its China US relationship. It just made no sense. So at that moment, I was buying more. And that's how these things even out so quickly, right? Ethereum, right? So this is just leverage draining from the system. And now we're right back up. So the same thing could happen. Whereas if crypto continues to grind higher and Ethereum gets to this all-time highs, everybody who was liquidated out, everybody who's short, they're going to have a bad time, right? There's another liquidation event to the short side. So the grand scheme of things here is don't trade with too much leverage and don't overreact. If you did nothing on Friday, you beat most of the people out there because, again, now we're what? We're down 1.68% from all-time highs. It was such a big event, but if you just closed your eyes and you weren't on margin, it's no big deal, right? Some of your more risky stocks got hit real hard, but like IonQ is just right back to it. And this is kind of the poster child for risky stocks. So yeah, just don't worry too much about it. All right, let's start going down the list here, talking to people. Open. Full disclosure, I am long some open here. And let's move this over and go back. No, where is it? This one. This is the chart I want. Open. And the reason I'm long some open is because of the short float. I initially, so I'm long open from, this second leg. I didn't get this big pop up, but I got some in the second leg. And I sold out some here, and I have some in here as well. So just full disclosure, if I own something that you guys are going to ask a question about, I'm always going to try to bring that up just so that you guys know I'm not talking my book. You can see this box that I had already drawn when I brought up the chart. From a technical side of things, as long as we're in this box, there's no technical analysis to be done. We're just in a range. We're just chopping around in this range. Nothing's really happening one way or another. Sorry, I've been talking a lot today, so I'll probably be drinking a lot of water. Yeah, so we're not really doing anything. We're not up big. We're not down big. We're just sideways consolidating. Nothing really happening in open. Now we're down 4 days in a row, so a bounce is probably on the horizon there. And so under, unless we get under like 6.5, I don't care. Or we get over 11, I don't really care. I'm just in this area. I just keep a look at this number. If they're still short, because on open, a lot of the shorts took place around $1. If they're still short around 25% of the float, they're gonna have to cover. They're gonna have a pretty bad drop time. BTOG is another one. This is stock is likely going to zero. Bit origin, non-durables, food. Are they actually still food, or are they YOLOing Filecoin? So the reason why I make that quip, right, is because the stock was never $200. Anything that's down 99.9% is likely down 99.9% for a reason. So the two things you got to look at when you're trading junky companies like this is what is the short exposure, or sorry, what is the cash exposure to the position? When are they going to have to raise money off you? Because if you're down 99.9% and you're sub $1, your company's really bad. There's no other way around it. It's a bad company, it loses money, probably doesn't have a lot of cash. So the question is, when are they going to come out to you as a retail person with their hand out and say, let's dilute you in order to make more money? Right? So you got to find out when that is, because you don't want to be the guy who's against the company when the company is selling to you, right? You just don't want to be that person. It sucks, right? So you look at free float. Yeah, here you go. Don't need that. Get rid of that. So this lower chart is the free float of the company, and it was 270,000 shares, and now it's 6 million. So if you owned 10% of this company back here, you own less than 1%, 0.5% of the company now, if you own 10% of the company here. So they're diluting you. They're saying we are taking from your percentage ownership of the company because we need cash, because our company is so bad that we can't make any money ourselves, nor can we raise that money by going to a bank or something like that. We have to take it from you. Those aren't the companies that I want to hold for any length of time. So unless you know of something in the horizon where they are going to change and start to make money and that they have enough cash to get them there, these are the things that I don't really want to touch. That's why, again, lots of studies on buying stocks that are hitting new all-time highs versus buying stocks that are hitting new all-time lows. Now, technically, if it gets above, say 50 cents, you want to take a shot to see if it gets to a buck, fill your boots. I just understand that you are against not any scary, being that is naked short, the blah, 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 blah. The company is selling to you. The guy who owns the company, they're selling to you. So you're not buying hoping that there's more buyers from retail than there is from institutions or something like that. It's the company that's against you. And I just I don't want to fight the company that, it's just, I have enough problems than to fight the company as a whole, right? Citigroup's interesting. Of course, we have earnings tomorrow. We have earnings for JP Morgan tomorrow. We have earnings for all the banks tomorrow. Everyone should watch these, even if you're not someone who is participating in the bank rally, because the guys who lend the money out, the guys who, give the credit, the guys who finance new companies that are going to start up and potentially change the world, how they're doing is going to be very important and trickle down to everywhere else. If they are not doing well, they're not going to let people raise as much money. That's going to be not ideal. So definitely, keep a close eye on the bank earnings tomorrow. Technically, it's a nice pullback. It's a nice pullback to a nice little spot here. Having a good day with the market, probably oversold on this pullback. But whatever I say just gets completely trumped by earnings, by their earnings. I think JP Morgan's tomorrow. There's a bunch of them that are, this is tomorrow in the AM. So it's before the market opens. Technical analysis before earnings is kind of useless. You can look at the studies. Generally, it's like a 50-50 shot whether it's going to move up or down. For the overall market, what we're hoping for is just little change. We want to hear comments about the consumer's fine, the lending market's fine. That will help out the whole world because banks are important. Can't have a functioning and a growing and a strong economy without good banks. So, gun to my head, I'd buy it there, but as opposed to sell it. But I'm not taking anything into earnings. GovX Land, this is another bankrupt scam company. This not only is probably going to go bankrupt, somebody should likely go to jail for this company. This is $71 billion a share. I don't think I need to tell you this company was never $71 billion a share. They are reverse splitting, right? This is the absolute example of that other one that I was telling you guys about earlier. This is a company that is ruining its shareholders, right? If you had one share in 2018, that's 10 million shares today. It's really bad what they're doing. This thing is criminal, and I wouldn't touch this with anyone else's money. I wouldn't wish on my worst enemy to hold a stock like this. Right? Can it bounce? Maybe go to like $2 or something one day? Yeah, but it's just going to be some random news event and likely a flash in the pan. Just know that this thing is never going to $100, $200. It's certainly never going to $71 billion a share. This is the new Mullen that did this over and over again. Reverse split crash, all the way to zero. Sadly, nobody went to jail for Mullen. Just looking at this chart, it feels like somebody should be behind bars. TMQ, this is part of the whole thing when it comes to these rare earth minerals, which are very much not only in play today and right now, but as you can see, this one gapped up. I think the government's taking a space in this one. This is very much in play total. And the longer the China deal and the back and forth drags on, actually, the better for these companies, because this is what they're spatting about now is the rare earth minerals, and they're obviously important for everything, but very much important for the AI thing, right? Because a lot of these like cobalt and magnets and things like this are important in data center creation, in building of different things. So this not only is a great sector to be in right now, it's a decent looking chart. So this is after a gap. To me, this is the price action that you want to see. You don't want to see a gap and then it just completely crap back down. You don't want to, that just means that when it gapped, investors and holders of this company looked at it like a gift and said, oh, great, right? We gapped up and I can finally sell this company that I want to get rid of. And that's what causes things to gap up and just sell right back down. When you have a gap up and then it holds for a number of days, you're getting a little bit of a vote of confidence there where the people are saying, okay, it's gapped up, but I don't feel the need to sell. So the lack of selling is what keeps prices like this higher and keeps price like this pushing up. It's and that's looking great. So what I would just do if I was looking to trade this is you just wait maybe another couple days or a week and you draw to the high and the low end of this range. And if it breaks you the high end of the range, you buy it. You got to stop at the low end of the range and you go from there. But this is definitely a really good sector to be in because this is the one again that they're spatting about with China. So you could very easily frame the whole I'm going to buy in as America and as the government, I'm going to buy into these particular companies, these rare earth companies, because it's now a national security thing. Same way you could frame energy and say, or semiconductors. Say this is a national security concern because you can see how if China gets mad at us and rare earth stuff gets harder to get, how much it hurts us. So let's buy some more rare earth companies. So yeah, the same as no, the four U's and your Yuma, right? All of these are kind of the same thing. PLTR, Palantir, really underperforming the overall market here, and that's not what I want to see. What I want to see, and what I think we could look at together, and I think what would be good, is find me stocks that are above yesterday's high, right? Like MindMed. I'm just going through my list here. Briefly was through yesterday's high. Find me names that are doing that well, that are going through up and through yesterday's high or breaking through yesterday's high. The reason for that is it's very simple relative strength. The SPY is kind of right smack dab in the middle of that kind of crash range. So if you can find companies that are, way up here relative to the SPY, they're going to be doing better in the overall market. It means there's increased demand for these stocks. If you find stocks that are down here, that is right relative weakness or decreased demand. So I want to find names up here and not so much names down here. So that's when I look at for PLTR. I, Overall, it looks nice. It's basing up near highs on the longer term. If it can get over 190 or so, or get over this high right here, I like it. I'm just not going to buy it here, considering it's doing a little bit worse than the overall market. I'm not really a buy support guy. I'm like, prove it to me. Prove to me that you can get to and through kind of 187, 190, and I'd be interested in a PLTR there. HYLN. Hillen Holdings. That's an interesting one. It's a nice looking kind of big rounded base here. I have no idea what this company does. Auto parts. Okay. So I don't know if they're going to be helped or hurt by the whole palladium move here. Palladium, platinum, all these things are ripping and they're involved in a lot of these car parts. But this is a nice looking chart. This is the kind of thing that I'm a little bit more interested in because they're nice rounded bottoms. They're things that are kind of going down for a while, then going sideways for a while, and now they're breaking up. That's what creates a rounding bottom, right? Was down, stopped going down, and now starting to go up. Don't need to overcomplicate that. Looks like we're grinding up back through highs here. We're grinding up back to $3. Maybe we could go hit 450. A lot of bag holders in this name. So I would just look at, say, so this is the anchored view app from the all-time high. That's sitting way up there at $10. If you could get there, you'd already be happy. But just know there's a lot of bag holders, a lot of people hurt in this name. And then looking at this float chart, again, you can see very much right, diluting, not insanely, but a lot of dilution happening in this name. So just be careful. Again, know their cash position. Anything that's really beat up like this, and know their cash position. They're still losing money, right? So just how quickly are they losing money? And then, what's going to happen to make that stop happening? Because you just don't want to be in a company, I guarantee you don't want to be in a company that has to dilute shareholders. BITF, BITF, Bit Farms. I think this is one of those. This is doing some of that YOLO, that treasury companies. I shouldn't call it YOLO, not YOLOing coins, but treasury companies. That's a nice look, right? I can't buy something that's just doubled in a straight line. It's obviously looking a little bit overextended. So could it give way and push lower? Absolutely, certainly could. Right, but I'm not going to make that bet. I just can't do that. I can't have it turn around and make that bet to the downside. So the nice push that we're having here, if you're long, draw a trend line or use a moving average that's fitting nicely or something that makes you feel confident in holding for a period of time and just hang out. If you're in something like this, your job as a trader is to come up in advance with the reasons that you're going to get out of this position. And it shouldn't just be it's up a lot, I'm going to sell it. It should be some sort of I think my trade is invalidated if XYZ happens. And try to make it some way that you're always capping your downside as a trader, but you're not capping your upside. That's the key. If you're capping your downside, but you're not capping your upside, you're just allowing some good, action to kind of take place. And then you don't need to be right very often. So for me, it would be, slap a moving average, slap a trend line, something, trailing stop, whatever it is, and just let it go. Because I'm not buying something that's just doubled off its lows. But if I'm not shorting something that's this big of a freight train, especially when it broke through this $3 area, there's definitely some momentum behind that. But I'm looking for a way to kind of hold on to it in a way that I'll be comfortable when it's time to sell. I'll just be able to hit the button and move on. Just because it could be one of those. I don't know. Could be one of those. Could go absolutely crazy. Plug. plug, same kind of thing here. You can see this every time you see this straight purple line like this, at least for now or in the past, my algo wanted to buy it here. Again, I'm a technician, but I'm a quant. So I have systems. Those systems tell me when to take action. That's why you can see all the alerts up here. These are all trades that my system was trying to take today. I know these ones. You see there's a lot of them. But, I do my analysis to figure which of those that I actually take, depending on what ones I like the look of. So just nice looking bull flag here. Really nothing to write home about. It's above yesterday's high, which I mentioned. That's definitely a really strong sign. If it can hold that today, well, then maybe you're going to get a little bit of a breakout. And if you're, you want to lean against maybe the low of this candle right here against that. But yeah, it looks nice. That's a nice looking chart. Circle, a triangle breakout. I kind of see how you could do it. I don't see it though. What I do, that blue line that we have here on circle is the anchored VWAP from its IPO. So that is the average price of the average market participant from its IPO level. So this is where the average person is kind of sitting from the existence of the company, and that's around 172. I call it 170 to 175, probably is the easiest way to do it. And we are below that. So the average person in circle is losing money. And we are at the low end of this trend line, I can see. So if anything, I'd be kind of looking to see if we're going to break down under that trend line. What you want to see, obviously, for this company is quickly recovering of the entire crypto market, that there's no lasting damage out there when it comes to crypto. That would be a big thing. And then for me, again, I want to see it get back over this anchored VWAP. You can see when it bounced there, you had two nice bounces from it. And then when we sold under it, when we came back to hit it from the upside, we just sold back down pretty quickly. GEVO. This is just it's one of those. Don't need to give the whole speech again, right? Hasn't been $100,000 a share, just an awful company that's trying to recover. So your question is, are they going to recover? What has changed to make them recover from being a horrible company? So then I look at this and say, okay, how many bag holders up here at 13, at 15, at 7, at 4, 5, at 2.5, at 3? Probably a lot. So that doesn't make me super excited to get into something like this. However, short-term chart, nice little flag break maybe for a short-term trade. But again, any company that ever reads, it's at $1 now, and it was at 100,000 at some point. It's just they're just bad. Now you can take a look and say, hey, is there anything to change them? Just like this, they started to make $1. They turned just roughly positive last earnings report. So your bet is that they don't need to raise any money. And then that positive earnings growth will continue. And if it does, great. Just always be wary about companies like that have in the past had to held their hand out and had to go, okay, shareholder, I need money from you. It's just that is just not the place you want to be in. You want to be in for long term, like someone like Apple does the exact opposite. Apple buys shares from you as a company. They come back and they say, okay, we have so much money, we don't know what to do with, so we're going to start buying back shares. Whereas other companies who go, we don't have any money, we don't have an ability to raise it in a conventional manner, so we're going to sell you shares. We're going to force sell you shares. It's just not the game for me anyway. CMG. Chipotle's been in trouble ever since Starbucks took their superstar CEO from them. So, I don't know. We've got AI, we've got robotics, we've got spaceships, we've got all kinds of crazy stuff, and we're looking to buy an old Mexican grill. Maybe. The way I'm kind of looking at this is that on the long-term chart, you have this big channel down. Right, so you have this Right, you do like this bull flag for the long term or whatever it is, but this big kind of channel down. So the question is, do you want to wait until it breaks out, or do you want to start taking shots at the bottom of the channel? Maybe you could take shots at the bottom of the channel. I look at this and I just say, it had this same, look how long this happened last time. This is from 2021 all the way to 2023. So that's 2 years. And now this one started in 2024. Now we're 2025. So based off this, you can still have a whole year of this nonsense. Just not interested. Not interested to me when we have, again, robotics and space and all that cool stuff. Path is another one of those that, this is a turnaround story, right? This is a baddish company that's kind of coming, trying to make up its mind here. And clear breakout of this $15, and that is important. So I like the fact that it's so far holding that gap, and I think that's what it needs to continue to do. If we lose this particular gap here, then all bets are off. So we want to kind of hold on to this area. So I would just look at it and say, hey, if we pull back to 16, I might be interested in buying this. If we pull back too much further than that, it's going to be time to go. But it's a good looking chart. It's holding strong after this base break, which is, in my opinion, just exactly what it is that you want to see. So this one looks great. No pattern kind of right now, but if it just chops around for a period of time and then breaks this high of kind of 19, 18, 15, 19 bucks, you could be taking a shot here at highs at 27. LAC. So this is kind of, if you take this data, this is almost what I was looking at with Path, just this right here. And then you wait and you take that breakout, you have a really strong day, and now it's still holding nicely. This one looks great. Obviously, I wish I had taken that or gotten it before that breakout, but you can't win them all. Now it's a stock that has gone from $3 to $9 in a short line. So I can't buy stocks like that. To me, that's chasing. You're just FOMO chasing names. And FOMO chasing names is going to be the thing that hurts you in the long run more than anything else. I think in this game is chasing names that have already doubled and tripled and say, I'm going to buy it now. That to me is one of the worst things you can do, because if you're buying a name that's pulling back but is strong, like we saw with CMG, your downside is probably less, especially at like a really strong company like CMG. You just run the risk of dead money. With this, it's like, where do you put your stop loss if you're going to buy something like this? Way down here. So I'm buying it at 9. I'm putting stop loss at 5. Right, that's a hard game in order to make that math work in the long run. So if I own it, I'm just trailing a stop on it. If I don't own it, I'm just walking away for a couple months. Give me a nice another range like it had down here or something like that. All right, EB. Oh, Eventbrite. Yeah, I think I mentioned before that I hate these guys. As someone who goes these events, I just hate having to install their dumb little app and everything. Oh, sorry guys, voice is dying. I did a lot of talking today, so the voice is dying just a little bit here. But Eventbrite, this is another one. Like, why are you buying like a really junky event company in the age of AI and robotics? I just don't get it. And the price is reflecting that as well, down 90%, and then down another 25% in the last couple months. You can see I drew this trend line. Maybe you could just play a little bounce off this trend line. I just don't see the world that everyone goes, wow, now we're really excited about this event software. For those who don't know what it is, like a little app you install on your phone when you go to conferences so that people can find you easily and you can like make meetings. It's like, okay. So yeah, just been a bleeder from day one. I don't buy companies in incredibly long-term downtrends. So, for a short-term trade, maybe you're taking a bounce off that level and you bounce back to like 250, 275. But I just look at this and say, this is a long-term downtrend. Ever since this thing I IPO'd at In 2018, it's done nothing but fall apart, and every single bounce gets sold. Unless this is one of those that I think it's important to have this. There's a reason. What is the reason that you have that their whole life is going to turn around, right? That everything's going to change. They're no longer this awful company that's been bleeding its way to zero forever, but they have finally figured it out. And the way I look at it is I don't need to catch the bottom. If this is going to end up being a good company again, at some point it's going to trade over five. That's where it's got this double bottom here. It's got this area here. I would set out a target like $5, $6, or not a target, an alert. Say if you're going to recover, there it is. Recover this $5, $6, and then we'll talk. DNN. Oh, well, this is a minor. So yeah, a lot of the a lot of companies are going to have this problem. For me as a technician at this point, chart looks great. It's been gone from like $1 to $3 in a straight line. But what do I do with a company that's gone from $1 to $3 in a straight line? As a technician, there's nothing really I can do. You know what I mean? There's just nothing that I can really do in that straight line. All I can do is slowly grind higher and slowly hope that this move. If I'm in it, I'm just holding it. I'm putting in a trailing stop. I'm putting in something, and I just say, hey, I'm just gonna hope the gravy train continues. Until then, I don't know, right? I hope all of this works out kind of exactly the way it does, but till then we wait. If move this, if that changes, I'll deal with it then. So that's I can't you can't buy it here, and for me, I can't buy this here. I'm not going to short this here. So if you're holding it, great, have a plan. If not, I'm just not buying the stock up 200% off its lows. Right? UNH, full disclosure, I own some UNH from around this area. I bought some here. That didn't work out too. That was like a break even trade. And then I bought it again around this area when it started to bounce off that level. And this one's working great. I think you're kind of range bound for a while here because you had the Warren Buffett, I want to buy it. That really helped. But now you're kind of in this world where there's lots of DOJ stuff and court hearings and all of this on the go. So what's going to make people really excited about a UNH? Like they get really, really pumped and say, okay, I have to own this company and I have to own it now. Technically, it's just in the middle of a giant range, came up and it closed this gap right here, and then it fell. At some point, it's probably going to grind higher, but I just look at this as completely and utterly range bound and fairly slow. It makes sense as range bound. If you've got hanging over your head I am under investigation by the DOJ, that's a good reason for people not wanting to aggressively buy into your company. So I don't think this sees like $500-600 anytime soon. I also hope this is where the I hold some comes in, but I don't think it's going to see 250 again either. I think it's going to be somewhere in this range for a period of time. Benefit is at least you get a dividend while you wait. DJT, I'm shocked this is still a company that exists. They've got like 5 people on their platform total. The users are just tiny in comparison to what's actually going on. So good for them for still existing, I guess. But you could play off this support that we're seeing here, and I don't think there's anything super wrong with doing that. But it's a company that's kind of done nothing and gone nowhere for its entire life. So what are they going to do that's going to make it? The guy that it's at least his namesake is the leader of the largest country or the most powerful country on earth, and he can't get his stock going. Well, what's going to change that? You know, If you can't get it going here, you can't get it going now. Uh, when's he going to get it going? You know, you've won, right? You've got the most powerful country in the world. Um, and you can't get your stock off the mat here. I don't know. Like when am I going to buy this thing? So I just look at this and say it's got a high of 200 and a low of 10. It's just been messing around with that. But for a short-term trade, you know, you could look at this and say, okay, well, we're at this level right here. You take a shot. You know, again, my old trading mentor always just used to call this a basement window trade. And the idea being that if you're going to jump out the window, might as well be the basement window. So at least with something like this, you say, okay, you know, I know that if we spend any amount of time under like 15 bucks, it's probably time to go. So I'm going to buy it here at 16. And, you know, if it gets under 15, I'm going to move on with my life. I'm going to move on with my day. And then at least your risk is low. So you can take a trade like that and say, okay, well, you know, my risk is low. So the thing I would also look out for there is dead money. You know, are you going to live in an environment in which your money is dead, which means are you going to live in an environment in which you're not making any money and you're not losing any money and it's just kind of meh, it's just chopping around. I just don't know if that's the move, right? And it could be, right? So it's not like it's going to pay you a dividend, right? These guys don't make anything. There's like nobody on the website, but I get the idea of I want to be invested in the guy who runs the country. So maybe you just take a shot there, and then you set a stop at 15, and then you set a time stop and say, what, 6 months I'm going to give it. If it doesn't break 15, stop me out, and it can't get like over 20 in 6 months, then I'm going to kill it. So I would just add that kind of extra aspect to it. Wow, someone mentioning Beyond Meat still exists. I thought it was going bankrupt. I thought I read that they're going bankrupt. I don't invest in bankrupt companies. Yeah, this company is going probably bankrupt. I just can't touch a company that's most likely not going to exist at all in the near future. I just can't do it. No, thank you. I'll no thanks. Right? I'll invest in companies that are going to exist in the near future. Plus, I'm a technical analyst. What do you want me to say? Right? You do a crash explosion emoji on something like that. OKLO. OKLO. Yeah, this one's just grinding higher. All of these, right? SMR, NNE, all of these. OKLO just seems like it's kind of the king of them all, and that's fine, right? They're the king. They're the master. Good for them. And they're continuing to grind much higher, so that's also good for them. There's nothing really I look at this and say I can make a decision here, just like the other ones. This thing's doubled, right? A lot of these, you're hearing me say this over and over again, but I think it's important. There's stocks to trade, and then there's stocks just to leave alone. And this is why we kind of wait for our moment. We wait for a base to break out, a clean pullback, something like that. I look at this, I say it's great. It's hitting new all-time highs. If you own it, fantastic, good for you. Have a plan to get out now before it completely falls apart, which it will at some point. These are pre-revenue companies, so at some point this comes to an end. I don't know when that is. I don't know if it's now or it could be 1,000 for all I know. Just have that plan, have it in place beforehand. End phase. End phase, even with, if we look at TAN, so solar, it's actually been ripping since the beginning of 2025, up 100%. Solar has doubled, absolute just rip show. End phase has not. So you are very relatively weak to the overall market, and you're very weak to your individual sector. So I look at those two things and say, well, you're weak total, right? And you're weak kind of in general, um, what do you do? I'm not going to particularly pick up this one. If I was interested in getting involved in the solar sector, I'm going to look at whatever is holding up well. I'm going to buy the stock that's going up instead of the stock that's going down. And that's just the way that I personally trade. And the reason for it is you can go and you can look online, you can read all kinds of studies about buying. What happens if you buy the strongest name in the sector versus what happens if you buy the weakest name in the sector? And then you can also look what happens if you buy the strongest sector or what happens if you buy the weakest sector. And study after study after study shows that it's the idea that, hey, we are wanting to buy the strongest thing because the strongest thing has the most participation from the retail side of things behind it, or from institutional side of things. That's what makes it strong. You know, people being large institutions are buying relative strength to the upside on some of these names. They're buying for solar, and they are not buying, which is very important, end phase. So the question is why, and what do you think is going to change this pattern of let us sell end phase and let us use the money that we're raising by selling end phase to buy for solar, and again, what's going to switch that up? So there's end phase. CO, awesome content. Well, thanks. COW. Or is that CW? CWO. Emerging Markets Fund. There is not enough liquidity in this for me to trade it. Just be very careful. Anytime you see this, where there's days or weeks that go by that doesn't trade, no thanks. Right? It's just not something I want to personally get involved in. It's an index fund, so it will track. I don't think it's traded today. Oh, it's Canadian. So it's on holiday. That's why it hasn't moved. But yeah, these kind of things I'm just not interested in getting involved with at all. Not enough liquidity, so there's not enough volume. Liquidity is important because you need to get into, you need to get out of those positions, right? You need that, and if you're not getting that, then you could be right on the position and still lose money. And there is nothing more frustrating than being right and then still losing money. It's Yeah, it's incredibly, incredibly infuriating. So yeah, just be very careful there. Zim. Yeah, shippers. Oh, I don't know where that screenshot came from. Yeah, Zim, again, stocks in downtrends. I don't want to buy stocks in downtrends. I want to buy stocks in uptrends. Even stocks. So this is one thing that I bought some today. This Oscar, because it's in an uptrend and it's pulled back nicely. So I actually picked a little bit up today at 19. And you can see how this has at least been an uptrend for a short period of time. The only two things that we know about how markets move is that trends persist a little bit longer than they should if things were rational, if things were random. If things in the market were random, there wouldn't be trends. They just wouldn't happen, right? You would have an equal amount of up days and down days with no trend in sight. You'd have things that moved up and things that moved down and things that moved up and things that moved down. And that just doesn't help, right? What you want is you want things that trend, and you know everything does trend. If you look at markets as a whole, right? If you look at the SPY, it's obvious that there are trends, right? There are downtrends and there are uptrends, right? And there's downtrends and there's uptrends. And quite often, you could be the guy who's always trying to bet that this is the lowest point and this downtrend that's happened from $31 to 12 is going to change, and it's going to change right now. You could make that bet. That to me is a lot harder bet to make than I am going to be the guy who is going to do the exact opposite of that, where I'm going to be the guy where I'm just going to bet that the trend that is currently in place is going to continue. And again, you can study. There's a lot of studies out there. You can build a couple of your own if you want to get cheeky. And just know that trends persist over time. Things that are going up, go up. Things that are going down, go down. If you want to take like a tactical shot on something because you think it's at a support zone, fill your boots. I just make sure your risk is small and make sure you know you're going against the trend. And by going against the trend, it means you're not going with the statistics that, again, things that go up generally go up and things that go down generally go down. There's always a turn in that. There's always a change. Problem is, it's just very, very hard to near impossible to guess and predict when those are going to happen. It's just the hardest part of the game, right? APLD, right? We're running out of time. We'll move a little faster. I don't know what to do with something like this. That's just up 400% in a straight line. If you own it, great. Put a trailing stop on it. If you don't, I can't short this thing. It's ripping. I can't buy this thing. It's ripping. I just got to leave it alone. INDI. Indie Semiconductor. Also, now this is interesting. This one I might actually. That's why you see me hold a pen. Sometimes, every now and then, you guys give me something that I really like to look up. This one is looking interesting because you can see nice uptrend for a long period of time. So it's moving higher, 200 or so percent uptrend. And now it's putting in this nice tight base where there's a clear resistance area and a clear support area. So the question is, do I buy this thing if it breaks, 475 with a stop at 375? That's $1. Do I think I could make $2 out of this, which would be 675, which would be kind of right up here? Yes. Right. Those are the components to me for a trade. It's a clear trend. There's a clear entry point. There's a clear exit point, a clear point where that synopsis is wrong if it breaks under this low right here. And from that entry to that exit, I think I could get at least 2 times that. Because even after all this analysis, there's nobody out there who's right all the time. Everybody is right 55 to 60% of the time if you get real good at this game. So what you have to do to make sure that you're making money is that risk reward works, right? You can draw this out on TradingView pretty simple. So if I buy this here, oh, that's a short one, do a long one here. So if I buy this here and my stop goes down here, can I get 2 times my risk? Because if you're right half of the time, and when you're right, you make $2, and when you're wrong, you lose $1. That ends up being a really good game to play in the long run. So that's interesting to me. I like the look of that one. I like things that have sold off, but now they've recovered and they're holding on to that recovery, right? This hasn't really gone up, hasn't really got down. This has been like a choppy place for a long time. So yes, I like that. I think that for me, the trade is kind of simple. Over $5, I want to be in, like say under 4 or under 3. That's going to be your stop. Under 4 would be a more aggressive stop. Would be easier to get that 2 to 1. Under 3, you just kind of let it go. So DKNG. Yeah, DraftKings again, downtrend, falling apart dramatically. I think. Listen, I'm not the financial guy out there, but DraftKings are. Why use DraftKings when you use like a Kalshi or Polymarket or something? A lot of competition has entered their space, and that's problematic for them. They have to hold this support. That's the way I'd look at it. If you're looking to buy the dip, they have to hold this zone right here. And if you're long, that's kind of for me where I'd say, okay, enough is enough, and they have to leave. You want to see like partnerships with these guys. Baba, you're going to take a lot of risk with Baba while this kind of fight goes on with US and China. But nice looking. You see what happened when we broke out of this wedge. We went higher long period of time. Now we're having a sharp pullback. Nothing here really technically till 150. That's interesting to the downside, but it's more of an interesting kind of place there. CRM, Salesforce. This is another one, right? At clear support. So if you're one of those people who wants to take a shot here, you can. Under 225, you're probably wrong. But why is this thing almost got cut in half? And what are they going to do to change that? I think it's AI. Right? I can use AI to do a lot of the stuff that I could over at Salesforce. So why use Salesforce, right? MLTX. Yeah, no way. Something happened. They're a therapeutics company. Something happened for them to get cut 90% down. I'm not touching anything. That's down 90%. OKTA, another pretty awful downtrend, and it looks like it's breaking down. Again, I'd just say as a group, please go study stocks, buying stocks that go up versus buying stocks that are going down. And I know that's like a really gross oversimplification of all this, but in the long run, you want to be buying stocks that are in uptrends and you want to be avoiding stocks that are in downtrends. And it's not to, single anyone out or anything, but I know it is very ingrained in us to want discounts. We want to buy things for a discount. If I walk by and there's an apple for $1, and then I walk by and that same apple's 75 cents tomorrow, I feel like I got a discount and I could buy it there. It's not generally the way it happens in speculation. It's you're buying things that are moving upwards, they're breaking out of bases, they're making higher highs, and you're holding them until that pattern reverses. And that's generally speaking, of course, not always. I will never claim to have more than like a 55, 60% win rate. Some of my strategies have a sub 50-50 win rate that make money. It's just understanding that, it's not the game to buy things that are junk and hope they become good. It's to buy things that are good and then hope everyone is kind of with you that they're going to get better. A couple more, and then we'll call it mRNA. This is one of those that, yes, it's got a nice support here that's looking interesting. I'm not interested in this name until it breaks higher, until something tells me that this is reversing and we're going to get a push out of this range to the upside. So that's all the way up at 36. I like low bases. I like when low bases resolve higher. That to me makes perfect sense. I don't want to buy when they're in downtrends because for a low base to resolve upwards, it has to be uptrending to get out of that base. And I want to see that uptrend for a little bit. So we got to remember what an uptrend is. It's just people buying something as it's moving higher. Each dip is getting bought up at a higher price. That's what creates an uptrend. It means there's people out there with real money that are looking to buy things as they move higher. And that's what I want to look for. So just quick look back at the SPY before we call it here, guys. I just want to say, hey, we're still grinding. We're still pushing higher. If we do like a 2-minute chart, you can see we've been just grinding higher most of the day. Ever since this opening range, we've been pushing up. That's fantastic. It's what we want to see, unless you sold out or shorted on Friday. Then I'm sorry. But it looks like, at least for now, at least until the next tweet, the worst is over here. So find this as a time. I just implore you, one great exercise, find things that were relatively strong during this scenario that actually did well when the market was selling off. Those might be names that you look at going forward, like OKLO. Just another perfect example, right? Did fine when the whole world was falling apart. Those are probably names that you want to own. So thank you all for coming by. I always appreciate it. Again, I'm Michael Nauss, CMT. Wherever you can find me,